there, good morning. You're watching ET Now and this is Market Cafe with me, Snehi Shah, and along with me is my co-anchor, Lisa Fernandez. Good morning, Lisa.
Very good morning.
So this is a show where we take you through all the important global stories that you need to be tracking, how the US markets closed today, how the Asian markets have opened up today, and in the second half of the show, we'll also focus on domestic themes and tell you all the stocks that you need to be keeping on your radar today. But with that, let's kickstart the show then, and let's look at how the global handover has come in. And Lisa has tracked the global handover for you very closely this morning. Lisa, take us through what the US and European markets did. US markets have managed to close higher.
Right, so very good morning to all you viewers as well as Nehi. So let's start with the US market first. So the stock futures are trading flat as we speak right now. But talking about the indices, all the major indices, they were trading higher as investors are awaiting the US inflation and jobs data this week. Today we also have the jobs data that will be released, and that will mark the beginning of the several labor market reports that will be out towards the latter part of the week. We also have the non-farm payrolls data that will be out. Well, talking about how the indices, all the major indices, they gained ground yesterday, and Dow Jones gained around 200 points. It was up around 0.6%, and it closed at around 34,559 points. S&P 500 also climbed 0.6%. Nasdaq advanced around 0.8%, and it finished the session at around 13,705. Well, Chinese ADRs like JD.com as well as Alibaba, they rallied over 2%, and that was after China halved the stamp duty on stock trading, and that was to boost their ailing market. Also, some news on US Commerce Secretary visited China to cool off the tensions. So with that, shares like Intel as well as Micron also rose. And special mention also goes to 3M shares that rose after paying $5.5 billion, and that was half of the potential liability to resolve the lawsuits over the defective earplugs. So that was on the US market, and towards the also US consumer confidence index will be released today, and on Thursday we have the PC index, that is the personal consumption expenditure index, that will be out, which is an important Fed gauge for inflation. Well, that was on the US market check, but moving on to the European stocks, they closed higher as investors looked ahead to the fresh economic data, and Europe's stock 600, they logged the best day over a month. Talking about the Eurozone money supply, it shrunk for the first time in 13 years as lending slowed down. And the United Kingdom market, that was closed for a summer bank holiday. So that was on the US as well as the European market. But moving on to commodities as well as crude checks, Nehi, what are you seeing on that front?
Absolutely, Lisa. Thanks for taking us through what the global handover looked like. Let's also take a look at what commodities did then. And oil prices were flat on Tuesday as worries that further possible US interest rate hikes could pull down demand were countered by concerns of a tropical storm off the US Gulf Coast that could impact supply. Now let's look at what Brent crude did then, and Brent crude is currently at that 84.2 barrel per mark, very close to the 85 barrel per dollar per barrel mark. And on the other hand, you've also got WTI oil trying to hold on to that $80 per barrel mark by the skin of its teeth, but just under that 80 mark right now. And investors are awaiting key US economic data later this week that will help determine the path of interest rates this year and the next. Now remember, the Fed Reserve Chair Jerome Powell at the Jackson Hole Symposium on Friday has said that the US Central Bank may need to raise rates further to cool stubborn inflation. Meanwhile, tropical storm Idalia lashed western Cuba on Monday and was almost a hurricane as it headed towards Florida. Now the storm is likely to cause power outages and could possibly impact crude production on the eastern side of the US Gulf Coast. Now this week, the focus will be on the US Personal Consumption Expenditure Price Index report that is due on Thursday, and the August non-farm payrolls data on Friday. Investors also continue to remain wary about China's economic recovery, worrying about demand in the world's second largest oil consumer. So that was on the oil front. Then let's look at what gold prices did. And gold prices edged higher on Monday, helped by a retreat in the dollar and bond yields, while investors awaited a slew of US economic data for the week like we mentioned, and more clues on the interest rate outlook. Spot gold rose 0.3% to that $1,919.6 per ounce, and the dollar eased against rivals, making gold less expensive for other currency holders. The benchmark 10-year Treasury yields held below their recent peak. And let's look at what GIFT Nifty is doing. GIFT Nifty is currently at 19,346. Remember, we closed yesterday at that 19,306 levels. So just a nominal uptick of 40 points. That is what GIFT Nifty is indicating. So let's see how that pans out for our markets this morning, Lisa.
Well, now let's also look at what other events that we have to keep a watch on for today. As mentioned earlier, US Conference Board Consumer Confidence Index will be released today. And on the Indian front, we have the newly listed company SBFC Finance that will be reporting their earnings along with Gillette. On the corporate action front, Mrs. Bector's Food Specialities Investor Day will be held today. Tatva Chintan will be considering issue price for their QIP, so watch out for that stock. Jubilant Foodworks AGM also will be held today. Well, on the other hand, on the other events, we have the world's first electric flex fuel vehicle launch, and along with that World Cup 2023, the tickets for the MasterCard user begins today, and also Hero Charisma XMR 210 will be launching today. So that was all the events that's in pipeline today.
Absolutely, and with that, let's also look at the other global stories that we're tracking for you bright and early this Tuesday morning. Now, the Asia Pacific bank loans volume plunged 28% to 6-year lows amid rising interest rates and China's weakening economy. The figures reflecting an ongoing global trend, but also creating space for the region's private sector credit to grow.
And during US Commerce Secretary's recent visit to China, Gina, Raimondo discussed concerns about the restrictions on American business, including Intel as well as Micron Technology, with Chinese Commerce Minister Wang Wentao. Both the counterparts have agreed to start the information exchange on export controls.
And Goldman Sachs announces plans to sell its personal financial management unit to competitor Creative Planning. The transaction is to be completed by the fourth quarter, and this comes in as a part of a strategy refresh which is seeing the bank exit some businesses and focus on its wealth offering and targeting the super rich.
And shifting gears, the iPhone 14 has emerged as the most shipped smartphone for the first half of the year, showcasing a shift in the consumer buying habits towards the most high-end devices. Well, in the Jan to June period, the iPhone 14 Pro Max shipped around 26.5 million units, the most out of any model for any manufacturer.
And the US Trade Representative Catherine Tai has expressed concerns to India's Commerce Minister Piyush Goyal over the country's import licensing rules. The concerns revolve around recent restrictions on computer hardware imports, including personal computers, laptops, as well as tablets. My colleague Sumita Karir has more on this.
Right, so United States Trade Representative Catherine Tai, who was in India last week, raised concerns over new import licensing norms that were announced by DGFT just a couple of weeks back. In fact, concerns were raised amidst worries that she said are related to shipments. In fact, she also stated that there were stakeholders that needed an opportunity to review and provide input to ensure that the policy, if implemented, does not have an adverse impact on US exports to India. In fact, Tai and Minister Goyal both agreed to explore this issue further and find a solution that addresses the concerns of both the countries. Remember, this comes after at least 8 trade bodies representing global tech brands wrote to the US Department of Commerce to push India to reconsider implementing these import restrictions on IT hardware that includes laptops and PCs, also stating that the measure could lead to delays and uncertainties and could severely affect the smooth functioning of supply chains. In fact, one of the bodies even held a meeting with officials from the Prime Minister's office last week requesting for concessions for companies that have committed to invest in PLI till a proper manufacturing base comes up. Remember, this is something that we told you first at ET Now last week. Now, with all of these bodies stating that the decision was implemented without prior notice, but government sources also told us last week that talks with brands happened well before this notification was announced. These new licensing norms will come into effect on November 1st and are an attempt by the Indian government to reduce the country's dependence on imports and boost local manufacturing.
We have to recognize that this is a high volume, high velocity, low margin business where the scale is important. And unless we are at a global level in terms of cost effectiveness, in terms of quality, we will end up hurting ourselves more. So clearly that's not the intention, that's not the idea. So without eroding that part of it, I think we have to step carefully to make sure that we don't end up closing our domestic market in a way that leads to the sort of pre-liberalization era of inferior quality goods. That will hurt us much more.
There is need for an industrial policy, long-term perspective for each important sector of the economy, in the manufacturing, assembly, and all kinds of other manufacturing processes. But if we suddenly react to a fact, and in this particular case, as we would recall, the response to the PLI scheme till July, which was the deadline, wasn't very good.
On what basis the exemptions are given? Because if somebody wants to breach a data, it can be through re-export, repairs, and all the other. How do you decide the 20 computers that is coming in for research? So the exemptions do not show that the security concerns related to the licensing and the exemptions are really not matching. On what basis? Now, when you talk about trusted partners, are these trusted brands, trusted importers? So there are trusted manufacturers. So there are many players engaged in the supply chain of the laptop.
Well, become a crorepati in no time, retire in your early 40s, use passive income streams to become a millionaire. These are the dreams that the so-called finfluencers have been selling to innocuous investors across various platforms. Let's take a look at the special report explaining how the unregistered finfluencers are under SEBI's lens.
Become a crorepati in no time. Retire in your early 40s. Use passive income streams to become a millionaire. Now, these are the dreams that so-called finfluencers have been selling to innocuous investors across various platforms. But now the capital markets regulator SEBI is all set to make these finfluencers accountable. So a consultation paper released by SEBI earlier this week has put finfluencers under SEBI's lens. And on the radar of the regulator is the not-so-healthy association between regulated entities and their association with unregistered finfluencers. SEBI has proposed that the registered entities or the intermediaries, they should have absolutely no relation with the unregistered finfluencers, or perhaps not even for any promotion, any kind of advertisement of their services. But let's take a moment. Let's just first understand who is a finfluencer, what's their business model, why they are facing flack from the regulator, from SEBI. Well, put simply, finfluencers are individuals who provide advice on financial topics like investing in the stock market, personal finance, on insurance. These are some of the areas. Now, as per the guidelines by the Advertising Standards Council of India, ASCI, an influencer means someone who can affect such audiences who purchase decisions or opinions about a product, a service, a brand, etc., because of the influencer's knowledge, position, or relationship with the audience. So finfluencers, they leverage their social media to influence financial decisions of their followers. And they make money by directly or indirectly promoting products. They charge a referral fee for usage of products or services that are suggested by them. Besides, there are paid promotions and there is direct compensation from social media platforms. These are their other sources of revenue for finfluencers. But in recent times, these finfluencers have come under increased scrutiny, from misleading and exploiting gullible investors to their involvement in unethical and illegal practices. The list of complaints against finfluencers is really running long. So what makes things worse now is the fact that these finfluencers, they're neither registered with SEBI, nor do they have the license to promote financial products or even offer as much as investment advice. SEBI has had enough with them. In their consultation paper, the market regulator has proposed that entities registered with SEBI or the stock exchanges or with AMFI, the mutual fund body, they must dissociate themselves with unregistered entities who use their name or product. SEBI also wants influencers to display their registration number, their contact details, their investment grievance redressal helpline, and they want them to make appropriate disclosure and disclaimers on any posts that they put out. SEBI has also proposed that regulated entities should not pay any commission to finfluencers based on the number of referrals. And once these are adopted, all these proposals are likely to perhaps herald enhanced levels of transparency in the financial markets. It's also expected to prevent instances of conflict of interest and promote financial awareness. But they would do it in a fair and transparent manner. So yes, all eyes on the market regulator, on SEBI, as it now begins to clip the wings of these unregistered finfluencers.
All right, with that, let's quickly slip into a very short break. But on the other side, when we come back, we'll tell you how the Asian markets have opened up this morning. Hi there, welcome back and thanks for staying tuned to Market Cafe. Now, the 46th AGM of Reliance Industries marked the dawn of a new era at the conglomerate. Nita Ambani stepped down from the board while Akash, Isha and Anant Ambani have joined the board of directors instead. At the event, Mukesh Ambani laid out a comprehensive picture of the business verticals and shared growth plans. Here's what Chairman Mukesh Ambani said at the meeting.
JFS will enter the insurance segment to offer simple yet smart life, general and health insurance products through a seamless digital interface, potentially partnering with global players. It will use predictive data analytics to co-create contextual products with partners and cater to customer requirements in a truly unique way. Dear shareholders, just like Jio and retail, JFS too will prove to be an invaluable addition to the Reliance ecosystem of customer-facing businesses. I have 3 reasons to be absolutely confident about JFS achieving tremendous success over the next few years. First, the digital-first architecture of JFS will give it an unmatched head start to reach millions of Indians. Second, this is a highly capital-intensive business. Your company has provided JFS with a strong capital foundation to build a best-in-class, trusted financial services enterprise and achieve rapid growth. Reliance has capitalized JFS with a net worth of rupees 1,20,000 crores to create one of the world's highest capitalized financial services platforms at inception. Third, JFS is blessed with a very strong board led by Shri K.V. Kamath, a veteran and most respected banker.
Our stores received more than 78 crore footfalls during the year, and the number of registered customer base grew to nearly 25 crore. We're delivering value to over 30% of India's addressable population. All this has made Reliance Retail rank among the top 10 most visited retailers in the world.
Retail business has done wonderfully well. As it is, Reliance's consolidated revenue now comes, almost half that revenue comes from the consumer side of the business, which is essentially retail, Jio, etc. So you would notice, therefore, that they are now well-seeded kind of business verticals. With Qatar Investment Authority coming in, I suspect that soon, and the next step, therefore, for Reliance would be to try and aim to grow beyond the retail presence in India and trying to grow, probably have a global footprint, so to say. So my reading of the entire things that are happening at Reliance, with Jio coming in roughly about 8 odd years ago, to the retail business rapidly growing now.
And staying with Reliance, my colleague Somit Sarkar joins in to give more details on the AGM. Good morning, Somit. Take it away.
Well, no big bang announcements coming in from Reliance Industries AGM on the telecom business. Mukesh Ambani, who's the chairman of the company, said that Jio has nearly 5 crore 5G users on its network so far, and going forward he's expecting more of 2G users to shift on Jio network with the launch of Jio Bharat phone. On Jio AirFiber, he did mention that the launch date would be September 19th, and with the launch of Jio Fiber, the total addressable market for the broadband segment of Jio platform will increase by around 200 million homes, that is nearly 20 crore homes. Now on the AI side, he said that they are aiming to develop India-specific AI models, and they have already started recruiting talent to develop these India-specific AI models. When it comes to the retail segment, he did mention that several market investors have shown interest in Reliance Retail, but he did not disclose any further information on that front, and he did say that he will update the shareholders as and when there is a significant announcement coming in when it comes to the Reliance Retail, that is the retail arm of Reliance Industries. And he also mentioned that had Reliance Retail been listed on the stock exchanges, it would have been the 4th largest Indian company based on the latest round of fundraise that the company had done. Now going forward, when it comes to the FMCG business of Reliance Retail, he did say that he aims to take few of the FMCG brands globally in Asia and Africa as well, and the retail business would be the fastest growing when it comes to revenue and EBITDA. Lastly, when it comes to Jio Financial, the recently listed financial arm of Reliance Industries, he did say that they aim to take the AMC sector to digital first industry, and in AMC they have already tied up with BlackRock. When it comes to the insurance, they will enter the insurance segment with life, health and general insurance product, and they will also tie up with a global partner. And on the lending side, he said that the company is developing a payment infrastructure to serve both the consumers and the merchants. To sum it up, no big announcement, just one key announcement or one key statement coming in from Mukesh Ambani on the retail side, and that is several marquee investors have shown interest in Reliance Retail.
All right, now Indiabulls Housing Finance may be rebranded as Sanman Financials by next month. ET now has learned from sources that it has applied for a certificate change with the RBI. My colleague Ankur Mishra has more details on this. Ankur, what explains this move by Indiabulls?
Yes, ever since the company has changed from a promoter-led company to now diversified shareholders-led company, there are many changes which has happened in the company, and now it will be into a new avatar soon, not only in terms of name but also in terms of certificate of registration. We have been given to understand that the company has applied for a new name to Reserve Bank of India, and that is Sanman Financials. Now it is up to Reserve Bank of India to give the approval on the name front as well as certificate of registration front. The company is currently registered as a housing finance company, and it wants to change itself to NBFC. This route has been chosen because the company feels, as far as its asset light strategy, its business strategy, NBFC is more suited for the company. Hence that kind of application has been made to Reserve Bank of India, and we understand that Reserve Bank of India is going to consider the certificate of registration change request very soon. So you may see by next month both these changes happen in the company, and not only the name but in terms of strategy is also going to change for company. We have also tried to understand whether or not the company is going to bifurcate it into two different verticals, meaning the retail vertical or wholesale vertical. But for now, we have been given to understand that the company will be there as an NBFC only. On later stages, you may see that the company may see different verticals as well. We also reached out the company for comment, and we have got to know that the company has made application to Reserve Bank of India for name change and certificate of registration change, and there has also been one specific comment saying that there will be no changes in the products we offer.
Well, thank you, Ankur, for sharing us the reason behind the new avatar as India Bulls is seeking an NBFC status. But staying with India Bulls Housing, which will be Sanman Financials very soon, the company has repaid debt worth 1,112 crore of bonds. Company's borrowings are now down to 36,000 crores. And for that, my colleague Ashesha is here with more details. Good morning, Ashesha.
Well, yes, India Bulls Housing Finance and focus on the back of debt repayment that the company has done, and the company also reiterated its growth plans going forward. As far as bond repayment is concerned, the company said that they've repaid bonds worth about 1,112 crore rupees, which they had availed in August 2013. The company also said that the company has achieved large debt servicing in the second quarter of FY24. As far as their debt position now is concerned, the debt position at the end of second quarter will be down to about 36,000 crores, and net debt to equity will stand at just 1.8 times. So a big positive that could probably come in for the stock. As far as their growth plans are concerned, the company reiterated that from here onwards, company will now enter a phase of positive ALM, where loan portfolio inflows will exceed debt repayments by about 1,300 to 1,800 crores per quarter, all of which will now be available for asset growth. The company is now firmly focused on growth, and they said that because the business model is asset light, the company will not lead large borrowings from here on, and the company can earn on the entire AUM without building any ALM risk. So positives coming in for the stock, where they've repaid debt and they've also reiterated their growth plans going forward.
All right, thanks Ashesha for taking us through all those details. And then moving on, Piramal Enterprises will be in focus. Remember, the company had their investor day yesterday, and the management shared its ambitious growth targets for the next 5 years. It aims to be to be a leading housing-focused diversified retail business, and is also open to M&A opportunities. Vamakshi is joining in with the highlights of its investor day. Good morning, Vamakshi.
Well, yes, Piramal Enterprises is in focus today. The company unveiled its long-term growth as well as profitability targets, and let me quickly take you through some of the key highlights. The goal for the company is to build a leading housing-focused but a diversified retail franchise. As far as the wholesale book is concerned, 1.0 wholesale book, they're trying to run that down, while they're trying to build a granular as well as diversified wholesale 2.0 book. Apart from that, when we look at their growth, they're aiming to grow their AUM by almost 2 times to 1.2 to 1.3 lakh crores currently, and in fact they're and this would come at a CAGR of almost 15%. They're also expecting the AUM mix to be around 2/3 of retail and 1/3 of wholesale, and this could be achieved earlier than expected, is what the management had highlighted. They're looking to build nearly 85,000 to 90,000 crores worth of the retail AUM by FY28. The retail AUM is expected to grow faster than the entire book at almost 23% CAGR. They're also looking to build nearly 35,000 to 40,000 crores worth of the wholesale book. Now, as far as NII is concerned, that is also expected to see a rise in, as per the management, from 6.2% currently in FY23 to 8.5 to 9.2% in FY28. On the other hand, they're also expecting the credit cost to be normalized to 1.7 to 1.8% going ahead. Given all these positive factors, in fact, they're expecting to reach nearly 3 to 3.3% of consolidated return on assets by FY28, with a PAT of almost 4,600 crores during the same period. So all in all, they're also looking to scale up other value drivers such as the alternatives business as well as life insurance. And in fact, they have also highlighted that they will be looking to leverage the balance sheet strength to pursue M&A opportunities as and when they rise. So as far as the buyback is concerned, the company did announce a buyback of almost 1,750 odd crores, and they have clearly mentioned that the promoters will not be participating in this buyback, and they do have the kind of strength to go ahead with this buyback, and they will not be needing any further capital raise going ahead. So all in all, that was the take coming in from the management of Piramal Enterprises, and that is the reason you should definitely keep an eye out for this counter.
Thank you. We'll definitely keep a watch on Piramal. Thank you for sharing the targets which was highlighted at their investor day. But shifting focus, let me highlight and mark an important bulk deal. Tiger Global has exited Zomato by selling its remaining shareholding in Zomato for around 1,123 crore, and that was via bulk deal. The US-based investment management company Internet Fund 3 sold around 12.34 crore shares, and that comes to around 1.44% stake in Zomato. But with that, let's slip into a short break. More news and updates on the other side of the break, so stay tuned.
Hi there, welcome back and thanks for staying tuned to Market Cafe. This is ET now. Now let's get to move on with the show then, and a whole host of stocks will be in focus today on the back of major block deal action coming through. Sharad takes us through all of them. Take it away, Sharad.
Well, yes, at first today block deal is expected coming in for APL Apollo Tubes, where promoters will be likely selling almost 0.85% stake in the company. Now this is coming at almost a 4% discount to the current market prices. Apart from this, yesterday also the important block deals were announced, and we'll look at what the important absorption has been there. Firstly is Zomato, where Tiger Global offloaded an entire 1.4% stake, and of course the value was more than 1,000 odd crore rupees. But the absorption was coming in from key financial players such as Societe Generale, Morgan Stanley, Goldman Sachs, as well as Axis Mutual Fund. Apart from this, Star Health also was in focus, where 3 FIs actually sold on a combined basis more than 1,300 crores worth of stock. But the key buyers in this deal included ICICI Pru Life as well as Fidelity Group, where at a combined level, both of them acquired 3.7% stake in the company. Apart from this, minor deals also we did check about it, and we saw NRB Bearings, where promoters have been increasing the stake, and they have roughly increased the stake almost by 3.5 lakh shares over the last 2 weeks. And also secondly, Strides Pharma Sciences, where Morgan Stanley has acquired roughly 0.25% stake in the company, while the promoter was the seller. And lastly, I would like to point out a QIP issue opening, and that is coming in for PG Electroplast, where they'll be raising roughly 500 odd crore rupees, and the floor price is set at almost 1,641 rupees per share.
Well, thank you, Sharad, for taking us through the list of stocks that will be in focus on the back of a block deal. But it's the season of AGM, and the latest one being Whirlpool. Well, the management at the AGM, they have highlighted that they are aiming to regain market share. But what else is on the highlights? Winnie is here to share the details. Winnie, share what was highlighted at the AGM, the growth plans going forward.
Absolutely. So what the key highlight is coming in that management actually want to start regaining their market share. They want to attain the higher volumes and improve their profitability as well. Also, let's not forget the company has taken some pricing correction in Q4 FY23 to be more competitive, to arrest that market share decline that they had been seeing, and they're taking steps proactively to increase and improve their margins. So cost saving measures is what something the company has taken as well. They're focusing on building their premium portfolio, especially in refrigerators, washing machines, as well as AC. All the 3 segments, and the demand from premium range is what the company is highlighting is being better than the economy range, and that is why that focus is coming in on premium range, and in turn, that is going to be overall improving the margins of the company as well. What the company also highlights in terms of the guidance, that the revenue opportunity in the top load and the front load washing machine is what they see is a big opportunity over there, as well as they want to improve their profitability in the medium term. Mainly that is going to be driven by better volume growth for the company, premium products, that is going to be leading the better sales mix of the company, and cost reduction exercises like I was mentioning. So premiumization, penetration, improving their market share, that remains the key driver for the company and key focus of the company going forward.
Well, thank you, Winnie, for taking us through all the highlights. Positive outlook coming in there for Whirlpool. But now shifting focus on autos, BofA has come out with a report, and they have shared their view on the August retails. The August retails for autos, that was a bit weighed down, and that was on the back of inauspicious period as well as monsoon break. And also some market share shifts were visible, talking about the PV as well as two-wheelers that trended at around mid-single digit on YTD basis. But they are hoping for a festive boost from September onwards. On two-wheelers, soft August was seen on the back of seasonality, and Hero also slipped on market share gains. Moving on to the passenger vehicle segment, they said that it's not a tight market anymore, but market share gains was visible for Maruti. And lastly, on the CV segment, Tata Motors has made a comeback.
All right, thanks Lisa for taking us through that. But with that, I'm afraid we're completely out of time on this edition of Market Cafe. But you stay tuned to the channel because the market will take all the action ahead.